Oh, right. I hear a bell ringing. The tick must be making a new high or a new low. Hang on a second. It's making a new low. That's the my bell ring. I'm going to show my sound so you guys can hear that. That calls my attention to the equities either going up dramatically or down dramatically for the short term. Jeff, how many micros are we allowed to trade in top step evals? 5. That's the problem with the top step eval. That you can't swarm there. I'm only trading NQ in my top step eval, and it's been very challenging. But I'm almost funded there now. But it's a completely different set of tactics. I only use 1+1s in NQ and only alledges, and there I'm really careful. All right, cool. So let's go ahead and do the intro. We got about 7 minutes. All right, so this is a critical FOMC, and here's why. It's really simple. Equities are going up on the presumption that soft landing, we avoided a recession. The other reason that they're going up and that the Fed is in a tough position is that, believe it or not, inflation has actually waned a little bit. Inflation is the increase in prices, not the price level. Price levels remain high, but they've stopped going up as much. So the Fed's in a tricky spot, as usual, but they don't care. Their mandate's fairly clear. It's generally not all that political, believe it or not. So we'll see. But this is one of these Fed announcements, and I've been around a long time, and I've seen this before, but it doesn't happen very often, okay? Where we could see anything from a 1/4 point increase, a pause with no increase whatsoever, and some kind of guidance. And the guidance will be important in all cases, which was what happens at the press conference at the bottom of the hour. And we could see a cut. Any one of those 3 things is possible. I think the cut's a pretty big long shot. I even think a pause is a long shot, but it's about 50-50 if you look at the Fed fund futures right now on a pause or a 1/4 point. Now, there's also potential they could raise a 1/2. So I doubt it again, but we don't know all the data. So they see data we don't see, and then they talk about it. And then we see it when we see the minutes a couple, week later. So here's the deal. We have 2 potential outcomes that could cause a ridiculously large move if they were to not do anything or cut or raise a lot. Any of those 3 are likely to cause a fairly big reaction. A 1/4 point increase will probably give us a little bit of a sell-off, but not much. Because equities, there's still an argument for equities right now, particularly with the strength of the move up. So and the breakout we've seen. So it's a very interesting meeting. Don't have an opinion. The way to trade this is to look at the extreme. Where are extremes right now? Well, let's bring up the other panel I just had going. So I'm only going to trade NQ. I'm going to watch ES, obviously. But so right now, 747 is an extreme of NQ. So that is 15747, and we are trading at 15559. That is 200 points up. That's where it's really extreme. 709 is kind of extreme. These are the SDs of the VWAP. Okay, looking the other way, and we've already been down there today. 84, 484, and maybe as low as 447. And again, those are 100-point drops, and those can happen pretty quickly. So what I will be looking for is, if we get anywhere near any of those extremes, it's usually a decent trade to fade. In other words, if it's going down, buy it. If it's going up, sell it. But you don't want to get very aggressive because you can, it sometimes works in pulses. And I like to wait for the second pulse. So if it's going up, the first one is really hard to trade. The second one's ideal if it takes out the first one and you can grab it. Because that's usually where there will be some sort of reversal either way, from the bottom to the top. So that's how I play extremes. This is a tiny edge, and I use it. Oh yeah, we could totally hit that in a second. So I use this as a way to have fun, make a little money, without taking a lot of risk. When we get these news announcements, we're going to do it again tomorrow for GDP. We're going to do it next week for NFP. I do all those and some others sometimes. Sometimes the CPIs and PPI, the I's. So hang on a second. I'm going to delete something from my desktop here that's bugging me. I'm I like everything really clean and organized. There we go. All right. So anyway, this could be a really interesting one is my point. You want to be really, 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 really nimble. And hey, Samuel, welcome guests. Welcome everybody. Welcome TRG. And we're going to do, we're going to get the announcement in 2 minutes, and then we're going to have crazy price discovery for a while, and then it'll settle down a little bit, and then it'll get crazy again when the press conference starts, which is at bottom of the hour. So 11 and 11:30 on my clock in the lower right-hand corner here on the West Coast. So that's the story. Let's trade it. I love this one. It's one, I love doing this stuff. I might trade it in a PA, but I generally don't do this in PAs. I usually do it in evals or in my cash account. So what we'll do is we'll set it up to do that. So, and I'm going to do it with micros. I never do it with the mini. It's just too easy to get too far off sides. So we'll change this from my PA to a cash account. So cash account, far left dome, Apex, eval that's just about funded, but it's only got 3 days in the middle. And just been scalping aggressively in that one. So that one I trade pretty aggressively. I'm not going to trade NQ, which is this one over here. And then this is crunched NQ in the middle. And then the far right are ES, YM, and RTY respectively, with the liquidity for each on there. So this is a different set of accounts, but I use it for context. And also that's where I watch the liquidity on these two liquidity maps. This one is NQ, and this one is ES. Let me turn on the spotlight. It makes it a little easier to follow the tiny mouse that Zoom won't let me resize. Yeah, it could be a nothing burger. Absolutely, Amy. That, the nothing burger is probably going to be if we get a 1/4 point increase and they say that that's it for a while. That's probably a nothing burger response. And if they pause, I think the market's going to rally, to be honest with you. But I don't know. I've learned not to follow what I think might happen and just trade whatever is happening. And we'll see. So here we go. We got 10 seconds. Let's see what happens. The liquidity is already disappearing. There we go. Okay, it's in price discovery. Let's see. Okay, we pushed down to 535. That was as far down as we got. So we didn't even take out the low in NQ. And now we're going up. All right, let's see how far. It just tagged 575. It's basically just working the range. Let me put that other view back up so you can see what it's doing here, and you can see, I'll zoom in a bit so you can see the volume. It's the far right of each of these views, and it's really not getting anywhere very extreme here. So you might have called it, Amy. This could be the nothing burger, or we might have to wait for the press conference to really see some action get going. So not gonna try to trade this here. It's still in price discovery, but it's settled down a lot. I'll reset the DOMs. You can see there's a lot of volume kind of in the middle. And so what did they do? I don't have the announcement here. Just they did 5.5. Is that holding it, or is that an increase? I don't remember. It looks like, let's see, previous was estimated. Yeah, no, they raised a 1/4. Okay, I see it. Well, that was the expectation. So let's see what happens. We're probably gonna have to wait for the press conference at this point. Because we're still pretty much in the middle here. Look at my LRCs. We pushed the extremes. We didn't even get to the extremes of the open today, which are these two outer LRCs. We just worked the middle. So very muted reaction. So I'll be real interested to see how the press conference reaction goes, but I'm not doing anything here. This is a total sit on your hands. Equities haven't really reacted. They did the same thing. The tick went real high and real low, but it didn't change the advanced decline at all. So nothing really happened as far as the equities, which are kind of mixed today, by the way. If you're looking at the heat map, some tech's up, some tech's down. It's earnings related. The S&P is, very mixed. So, that's one of the reasons we're not leaving this range. We get to one end of it and they buy the stuff they've been buying. We get to the other end of it and they sell the stuff they've been selling. It's kind of makes logic, which the market generally doesn't do. So anyway, yeah, this is a yawn. So next up is the press conference. About 20 minutes away. I'm going to just watch this, but I'm going to try to contain the desire to just give you guys play-by-play because there's literally nothing to see here yet. But I think the press conference part could be really interesting. because the reason we're not getting a reaction right now is because they did what was expected. This was the most likely thing was a quarter point. So now what becomes important for trading a good reaction or going forward is going to be what they say at the press conference. Here's why we traded. We only did a quarter because, this, and that. And going forward, here's what we see. That's the part everyone wants to hear. And there's always a lot of nonsense around, what word do they use? Do they use this word or that word, or what color tie is he wearing? Or back when it was Alan Greenspan, which hand is he carrying his briefcase in? And people actually had been, recording this for years. It's hysterical. Anyway. So like I said, I was starting to say, I'm going to, if there's something teachable or interesting that happens, I'm going to comment on it, but I'm generally going to kind of just chill here until we get closer to the bottom of the hour. So please do hang out with us and we'll see what the press conference is like. But if you're not hearing play-by-play or any commentary, you'll know why. I may even go take a break and grab a coffee here. So Bar, back to your question about the Top Step eval under their new rules. And so yeah, it's only 5 micro. Well, in the 50, it's 5 contracts either way, micros or minis. And so any sort of swarming approach in the micros you need. You can't do it in the minis. You have way too much potential risk. It can move too fast, obviously. So it's challenging, but there's a couple of good things that I do like about it. There's no trailing drawdown. There's a daily loss limit. Well, there's a total drawdown and a daily loss limit. So you can play it kind of aggressively. They tossed in a free reset, and so I'd love to have another funded account at Top Step. It's been 5-6 years since I had funding there and even tried to. I've been elsewhere and trading my own money and whatnot, trading the other evals. So I'm really curious to see if I can continue to manage the risk with the mini only approach, only really, really clear, massively asymmetric setups for 1+1s. So my suggestion, if you do decide to try one, think through your risk management and the setups you're going to do in that one. Don't try to swarm. It is impossible to swarm. You can't swarm with 5 micros anyway, but it just that is not set up that way. It's much better to trade very conservative minis and at really asymmetric inflection points. And so far that's going really well. I shared my results so far in the pit, and it's going all right. I got another few days to fund it. It's more than 10 days. I'm not quite at the target yet. So, and I've had one loser day and a bunch of consistent winner days, and that's within their rules. I'm like at 20% of my profit on any given day, and that's the consistency rule. So anyway, I recommend it, but the Apex Lilu ones where they have parity for micros. And you can swarm, that's a whole lot easier to do. Trading a mini that tight is very hard, or 2 minis with the quote unquote 50,000, which really isn't 50,000, $2,000 of drawdown. So I'm really getting excited about doing these August care and feeding of inflection point classes. They will be every Tuesday, right after the initial balance forms. And I think this is going to be really fun. I've been watching and kind of putting together what the curriculum is going to be in those sessions. I've been watching the action, and I think this is going to be a really good addition to your knowledge, TRG members. So that starts Tuesday next, I think, it starts on August the first Tuesday is next week. So the first session will be next Tuesday. Let's see. I picked up the 150K bundle last time with Lilu, and I have one about to be funded. I paid for the second month. Exactly. That's what I did too. I got a couple funded at 150 in Lilu and Apex, and they're by far the place to play MNQ, because unless you just get really, really stupid and take way too much risk, you never get anywhere near the drawdowns, and it just gives you a lot more, a lot less stress, and you can just trade the way you want to trade. It's almost like trading a cash account. Yeah. Yep. It's up to 150 micros, which I will rarely go that high, even in one of those big accounts, because you just don't need to. You can get a lot done with 50 micros, and particularly, with that amount of drawdown. So Yeah, I think that's a good methodology. I agree with you. So we are just totally sitting. This this is NQ crunched. So it's just point by point. We're right on the VWAP. This is ES. We're right on the VWAP. We're right above the VWAP in YM, which has been remarkably strong. And we're right below it in RTY. YM's been strong because of earnings, though. So, that's this. Microsoft was down, and it's a big chunk of it. But everything, B of A is way up. Let's see, and it's a slightly smaller cap, but in general, that's what's been holding it up. And also, the argument in YM is it's got a perfect blend of tech and consumer and you know um, healthcare and finance. It's got just the perfect, and there's only 30 of them. So if you're an institution, that's the place to be playing right now, working the upside. And YM has been really, really rocking and rolling. If you look at its TPO view, that's it right there, and it's got a really strong consolidation at the high. And compared to RTY, which is not doing the same thing, and NQ has pulled back, as we know, that because of the earnings, so it's not that strong either. But it's still strong, but it's pulled back off the high, and probably going to take a run for all-time highs. It's pretty darn close. And then ES is consolidating at the high, kind of like what we were seeing in RTY. They're remarkably similar, even though they're completely different. I always find that fascinating. The patterns are always the same, the visual patterns, even though they're completely different. Small caps versus the S&P 500, but they tend to look remarkably similar in just, if you just stared at the price action. Obviously, RTY goes a little bit wider, but here you can look at it right now. So this is the RTY profile over here on the right, and this is the one for ES. It's just a slightly elongated version of it. It's like that every day, and except when it was rebalancing, and that always, I know Maria loves that. She trades off that. It's a really good edge to trade RTY that way. But you got to practice that and just do RTY, because it's like every other instrument. It's its own animal. So let's see. But what am I? Oh, I know what I want to show you. So I showed you this. And this is another example of the strength in YM right here. It's this one on the second from the right. And the others are just drifting around at the low end of the range or in the middle of the range. And this is working the highs again, despite Microsoft's weakness. And this is worth also having a look at. This is the daily for the last 2 years. Again, NQ, ES, YM, RTY, left to right. Look at, this is the NQ. It's almost at the high. It's only 767 is the all-time high. 4808. Yes, we could easily go get these numbers before we see any kind of a drop. And and I don't know if you necessarily should be interpreting that as a raging bull market. In the roaring 20s, before the crash of 29, we had very similar behavior. And there's a couple of trader economists, Yardeni's one of them, that think that might happen again, and I'm not so sure they're wrong. If RTY can clear this level right here, it could break out too. It's been coming off the low nicely. It's not, but for the market to rally, all 4 indexes have to be doing what the 3 are doing. So RTY is going to have to catch up. Otherwise, the market's not going to continue to rally. So it's interesting. Very, very interesting summer, and again, I say this over and over again, but it's worthy of repeating. Summers are different. The volume is low, the liquidity is thin. Your edge is going to require adjustment to trade it in the summer versus, in the fall or the winter when the volume is high and lots of institutions are trading. There's still a bunch of institutional traders in the Hamptons, and the volume reflects that. We were, before the FOMC, I don't even think we had traded 1 million. No, we still haven't. We're at 690,000 contracts. Almost at the end of the day. That's insane. I mean, we do that in the opening hour in the fall and in the winter. So, you guys get my point. So I'll tell you what we can do. We have about 12, 15 minutes until we get to the press conference. If anybody has any questions about anything, we can do open office hours for 10 minutes or so. I'm kind of running out of things to say, but I'll answer questions. So if you have any, let me hear them. Otherwise, we'll watch. This could be a totally uneventful FOMC here, if the press conference doesn't have any more interesting stuff happen, then, it could be all over and we could be done. So we'll get to the bottom of the hour. We'll let the press conference start. We'll see what kind of reactions are happening. And, if it's interesting, we'll stick around. If not, we'll wrap it up after that. So let's see what happens. Could you refresh your mind on how I'm using the NQ heat map? Well, first, let me ask a clarification question. Are you talking about the Auction Vista heat map here next to the dome, or are you talking about where the heck did the NASDAQ go? The index disappeared. Oh, every now and then it does that. Or are you talking about this heat map? That's what I'm asking you. Let me reload this and it'll bring back the NASDAQ. That's weird. TOS does that every now and then. So let's see. The Auction Vista one. Okay, let me reload this and I'll answer your question. Oh, come on, Zoom. Don't interfere. I'm going to pause the share for a second. There we go. Instantly it came up. Oh, why does it interfere with everybody other software's windows? I don't understand why Zoom does that. It has something to do with their video capture software, and there's just some sort of bug in there that it's probably a feature in their mind. Okay, now I can restart my share. All right, so this is what I was referring to, the other thing. So when it, the heat map of the equities. But you're asking me about this right here. Let me blow this one up and see if it will reconfigure properly so I can answer that in detail. I don't know if it will with Zoom running. No, it's not going to. Okay, I wanted to see if we get a bigger version of it, which I normally can do when I'm not screen sharing. Let me just see if I can drag it over and that'll give you a little more detail. There we go. Okay. So what am I using it for? Well, remember, I've got it running on crunched NQ. This isn't NQ. This is NQ crunched together 4 ticks at a time. And what I'm doing is 2 things. I'm looking for inflection points. So when I see a lot of volume, and there's volume everywhere right now, but let's say, it wasn't in the middle of, the FOMC, if we get up to the edge of a range, like up here, and I see all this volume and it's all blue like that, that means it's trading into the ask and that's getting absorbed. So it's a way of just seeing inflection points and interpreting what's happening, because it's showing the relationship, and this is the key, it's showing the relationship between the price and the liquidity. And this what you're seeing over here, this is the order book here in this column. It's kind of grayed out, but you can still see it. That's what people say they're going to do. Those are orders in the order book. The blue circles are traded volume. So it's not what people say they're going to do, it's what they're doing. So I look for places where there's lots of liquidity. Like, for example, we came down here to 76 and it traded heavily red. In other words, it's trading on the bid, pink on my dome. That means it got bought down there. So I would have jumped in there and joined that long under any other conditions. So that's a real quick version of how I use it. But to continue, Renaud, this is exactly the topic that we are going to be doing in care and feeding of inflection points, because those are inflection points, those circles. So they're showing, so what I use the Auction Vista heat map for is to show when we get to strong liquidity, it's easier to see on ES right now, does that liquidity trade and which side of the tape does it trade on? And so here it was mixed. So that wasn't a real clean top up there at 90, but this little one over here was much cleaner right before that. And then that level held and it pushed down. So that would have been a good spot to potentially jump in short. And the other way around, when it's red, in other words, it's trading on the bid and it goes up. Is that helpful? Again, we'll elaborate a lot more on that in the series starting next week, the care and feeding of inflection points. So let me know if that was helpful and if you have a follow-up question. Cool. Yeah, it's relatively simple, but a lot of people overcomplicate it. If the guys that use Bookmap, they're always talking about their iceberg sensors and all that crap, and it's crap. The order book and a heat map of the trading against the order book is a very simple thing. You don't need to spend $100 a month with Bookmap. And again, they make it so complicated and try to make it so visual with 3D bubbles and all that you can't see what's actually happening. And they're selling you sizzle, not valuable information. But just a basic interaction. And again, on the Jigsaw one, white is more liquidity and darker is less liquidity. So if it trades up into white and the liquidity trades and we come back into the range, that's a really good example of where there's passive traders, for example. And one of the things you can do to compare that, you can always bring up a structural view and see, what happened. Well, here they ran stops and it got absorbed, and that was 77.50. Okay. And surprise, surprise, that was an area where there was a bunch of liquidity. And I could do the same thing over here, and you'll see that absorption that I just saw on the footprint. Let's let this resize. And so you can see it was right down here. It traded into this liquidity. Wasn't active enough to put one of those little, bubbles on it, but and you can configure how big you make those. That's in Jigsaw, that's called the circle tuner. So what you can do is, like right now, there's a whole lot of them in NQ. So what I could do is make that less sensitive. And so right now it is on 3. I could make it watch how they disappear as I do that. And there's fewer and fewer of them. It's just making it, less sensitive or more sensitive. And so you can kind of adjust it on the fly if you want to. I generally just keep it on 3, but it varies. So anyway, that's what it does. Useful, very useful. But, on my other computer where I just scalp, and that's where I'm trading the Top Step one right now, I don't have the liquidity heat maps on there. I just watch the traded volume because I only trade that account at ledges. So I'm assuming that this particular condition or this particular condition is happening when I trade. And that's a little bit of I'm taking a little more risk doing that, but it's part of practicing to just dome trade only, which is a very advanced skill, but I practice as much as I can because it's a useful skill. But the other information that the heat map has is often a very critical piece. So again, you always want to have just enough context in your mind so that you have a good understanding of what's going on. It's easy to get analysis paralysis in too much context. And so that's one of the reasons I do that. I practice and just trade over there on the Jigsaw domes with no other information. And we did a whole series for 2 months of Jigsaw classes, which are in the library. And I did them on that computer, and I showed how you just use the tools in Jigsaw. And I did use the liquidity heat maps there, but I also showed trading without them. So that's something you might want to refer to. And I will try to find that real quick. Let's see. Yeah, we still have 10 minutes. Let me see. Yeah, that's a good idea. Until you understand something, boy, that's a really good idea, Renaud. Until you understand something, you should not try to trade off of it because you don't understand it well enough. So kudos to you. That's absolutely right. Now, why did I open this up? I was going to do something. I was going to grab the library.
You want the Jigsaw scalping class, which I am grabbing the link for right now.
Oh, yeah. I thought you might hear me and do that, but I was heading there in case you were feeding cats or something.
Got it right here.
Okay. Please post that in the chat.
Yep. Done.
Yeah. So, yeah, that's there you go. That link. There's a whole series of Jigsaw, and I strongly recommend watching those because there's lots of little tools in Jigsaw. Some of them are useful, some of them aren't. Some people like, some don't. And you can go crazy just playing with the tools. That's why it's called Jigsaw Tools. So I have a very limited set. On my auction Vista heat maps, I also have only one thing at the bottom, and there's 4 things you can have down there. I just have the flip chart. And the idea of the flip chart is to see if the order book is stacking or pulling in a kind of 3 or 5 tick summary of it. And that's what I use to see, things are changing. And again, there's a good explanation of that in the Jigsaw video series. There's all kinds of other stuff. I used to use the power meters, and again, I explained in a number of the videos where those are useful, where they're not. When you're new, they can be useful, but the more of that stuff you can get rid of, and the really visual, kind of monkey enabling stuff, the better. And, if you have to think about it, I think that's actually a better situation. So I am totally focused right now on just really zooming in on the traded volume, and everything else I use is kind of just to keep me from being stupid watching the traded volume and, getting monkey or making a really big mistake, like buying a low when, the tick is getting crushed or something like that. So it just keeps me out of trouble. But on my dome-only computer, every now and then I get in trouble. But again, that's really good practice because you never can see everything. So the less pieces of information, the fewer pieces of information you need to make a decision, the better. And you guys have seen my sheet that has all of the criteria I use. Oh, look at this. As we're going into the press conference, we're pushing down a bit, but we're still, in the value area. We're in the range. We're in the middle. It's nothing to get excited about yet. Let's see. Bob is here. So Bob, I posted this in the pit for you, but since you're here now, look how clearly the 2400 interacts with the initial balance. This is exactly what I was explaining. And it does it just as well for ES with these settings. Here it is right here in ES, and I'll put it in, there's NQ. It's really good at helping you understand what's going on since the open. And you had asked me about that last Sunday, and I posted a thread in the pit answering your question with some examples like that, but I just thought it would be fun to show them to you right there. It's really clear. So that's why I changed those settings. You're welcome. I wanted to be able to capture where that level was at any given time based on regression. And again, the beauty of regression is that it doesn't use the high and the low. It uses the best fit. So you can sometimes just go past the edge, and those are often really good opportunities to play back into the range. Or at least if you're wrong, it because you're already at an asymmetric extreme. So if it keeps going down and you're trying to buy it, at least it's really clear. Whereas if you're in the middle, like here, if I was buying here, where am I wrong? It's just there's too much of a range to even interpret it. So that's why the edges of the ledges and the edges of the volume profile are such good trading opportunities. See if structure cleaned up. Well, boy, look at this. We're right in the middle. We're building volume here. We have UB at the high of the regular trading. We have stops run at the low. That was the announcement, so I would disregard that. And guess what? I think we have UB at the, no, we don't. We have a clean top. We have an old UB up there. So yeah, you know what? I think the market's more or less had already priced in the quarter, which, obviously, the quarter point. So now the press conference, if he says something really weird or odd or something that freaks us out, the market out, or excites the market, we could get another run to the extremes. So let's patiently wait for another opportunity to play this, but we might not get it, and a lot of times that's true. FOMC, if nothing else, it teaches you how suddenly and extremely price action can change. And that's always good. So I always log in and trade these things, or at least look to trade them for that reason only, because it keeps my skills sharp and for everything else I do. And because it's just a really good quick education in how price action can change and, change every direction simultaneously. That's price discovery. So I really dig that. I think it's fun. And again, that's why I do these live sessions. It's a chance to meet some new people, maybe find some new TRG members who might be interested in joining us, and also just keep the skills. It's like going to the gym or going to the dojo and practicing your martial arts or your Tai Chi or whatever. Okay, here we go. We may have another opportunity here. This could be a long. I'm tempted to nibble here. I think I might. We're right at the edge of the range. I'm going to go ahead and get long here just with a few micros. And by the way, don't follow what I do. If you watch my sessions, it's better to just watch and learn. What I do can happen really fast, like this right now. It just fell down pretty hard. And I'm going to baby swarm this unless it gets really far away from me, because I think it's a really good opportunity to do that. Just grab some ticks. And I'm pretty good at that. And, you'll learn a lot more watching than, oh, he's long, I'm going to get long. Don't just mimic me. Okay, there we go. We took the first profit. We're up by $50. Let's get the second one. There we go. We'll cancel the target, protect this. We're now up 100. And so basically I'm long from 49.25. It's 60. Protect a little more. There's 115. And there's 130. And we're going to get hit here and take profits, I think. Nope, still going up. Cool. Let's protect a little more. Now we're hit. Cool. So that's an example of how you play an extreme on FOMC day. It was pushing down. It pushed here right to your question, Renaud. It pushed right down into liquidity and it got bought. And so I was there buying it. Why not? Look at all this absorption at the low end of that push down. That was a perfect place to grab in and catch some ticks. But you don't want to. I definitely want to be long all the time. No, I could have been down there doing that, and the sellers just really got excited, and boom, we go down really hard. You got to jump out of the way when that happens. You can't just keep scaling into it because you'll just get crushed. But if you have a really clear, definable spot to play, it's always worth trying. That was a really good response to the value area low too. The value area low got hit. We hit the liquidity traded, and it immediately got bought. The order book flipped over, so everybody was jumping onto the buy side, and up we went. It's that simple. You don't need any indicators. You just have to watch the traded volume. Everything else on my screen right now, I could do without if I just watch that. And that's what I mean when I'm just trading on the domes there. Just watch that absorption. It was really clear and at the low. And obviously, these are kind of the same thing. These are two MNQs. This is NQ. This is crunched NQ where it's really clear. This is ES where it's really clear. Look at that absorption. You get my point. Okay, I'll put the tick panel back up. How do I structure my swarm positioning? That's a complex answer, Christopher. There are 3 2-hour videos in our library where that is explained. They are in the TRG members portion of the library. I don't recognize your name, so I don't know if you're a member. I think you're a guest. JVC or Christopher, can you answer that? If you're a member, I can give you the link. Otherwise,
well, we can give him the link either way. You can always grab a library pass if he really wants to see it.
Oh, that's true. That's very true. Okay, hang on. I'll do that right now for you. So anyway, there's 3 videos where I explain that. And by the way, we're about to get the press conference, and I'm just going to watch. You've taken the courses, probably grab a pass. Okay, cool. Here, let me give you the link. They're really good. I start with just the basics of, what do you have to do to manage risk? Well, you have to assume the worst case from the beginning. That's the first thing. And then we go into how swarming was a tool that I developed with a friend of mine who has a really good optimization model for setups because he runs a hedge fund. And again, I explain all this crap in the videos. So, okay, there's the press announcement. So let's see, library, this is in Business of Trading Risk Management. So I will get you the link in a second here. It's this series right here, the first 3 videos and the lab. And then Lee has some of structural risk management after that. So it's definitely worth grabbing a library pass and doing these, Christopher. So
and again, weekend or something.
Oh yeah. They're each 2 hours. So it's like 6 hours, and you could just listen to them and then watch and the third one is really where I get into how the swarming works. So and by all means, if you do that, feel free to ping me, in the public section of the pit if you have questions. It's really simple and straightforward, but if you do it wrong, you will get crushed. and there's levels. I start with the idea of what's called a 1+1, which is I will add to a trade once as long as the idea is still valid. And then swarming is where the idea is valid, but I don't know exactly where the low or the high is going to be. I can just see that the idea is working. So I have a very gradual, increasingly aggressive scaling. So the more extreme we get, the more size we put on, but we do it really slowly. So, it has to get to like SD4 before you really get aggressive. But there, you've got ridiculously high odds of it working. It's purely thinking in bets. It's purely, playing the odds at extremes. Yeah, exactly. Scalping is really hard to do with just an entry in and out. In any index, but particularly in NQ and MNQ, because it moves around so much. And that's exactly the value of it. And that's why swarming works, because NQ loves to push extremes, stop everybody out, and then come right back into the range. And so it's really hard to figure out where to play. But if you swarm it, you can play that every time. You just have to manage the risk. It's all about managing the risk, as any good trading is. But swarming is a very distinct risk management approach to take advantage of a specific set of conditions. So it makes scalping so much easier. I mean, there's probably 5 or 10 people in the room right now that could tell you, that they use it and how much it's improved their ability to scalp NQ and large moves. I just looking at the names, any one of them could give you that feedback. So it's a cool idea. It's like nothing else. Like everything else is not perfect. It takes practice, but the idea is really straightforward. It's not like there's any magic or you need a degree in calculus or anything to do it. You just have to understand what regression is and what a standard deviation is from a mean, and that's it. It's really simple. We look at extremes of the price, and we use LRCs for that, which is this. And we look at extremes of the volume to confirm that idea or to dissuade that idea. And we do that with the extremes of the VWAP that I showed you. So these are standard deviations of the VWAP. From 1, which is normal, so anything from 1 to -1 is normal. And then we start getting interested in extremes at SD2, much more interested at SD3, like here. That's between 2 and 3. That's a pretty good extreme to play. And then when it gets to 4, again, your odds are just so overwhelming that it's going to go back into the range at least a little bit. Like here, look at NQ right there. It blew through SD2, it touched 3, and then we're right back to the VWAP. So again, it's a cool tool if you combine the regression of the price action and I guess the best way to describe that would be the distribution from the mean of the volume. Because that's what we're looking at. It's just pure bell-shaped curve theory. And you know what? There's one other thing let me share, because nothing's happening right now. I'm sure he's talking and the market is just digesting. We're not going anywhere. So there's one other useful resource for that. Math is Fun has a really good bell-shaped curve explanation in English of what a normal distribution is. And that's what I'm taking advantage of when I'm doing the SDs. You can see here, when you get to 3 standard deviations, you have 99.7% of the values. You get to 4, it's 99.99. So again, that doesn't mean it will stop and turn around, but the odds are overwhelming that it probably will at least try to. And that's a massive edge. There aren't a lot of edges in the market where the odds are overwhelming something will happen. So that's what you do with it. Hopefully that's useful, Christopher. All right. Well, you know what, guys? I don't know what he's saying. If anybody's watching the press conference, I never watched the news or any of the talking heads, but this is literally right on value. So I doubt the market's going to do anything more until the close, which is still a ways away. So let's go ahead and start wrapping up. Burning desires. If anybody has any questions they have to get off of their chest before we leave, we'll take those now. Start typing them if you have them. Please, guests, join us tomorrow morning for GDP. It should be really important, because if GDP comes in really strong, that's going to freak the Fed out. And they're going to, that's going to be back to raising. So, again, it's another piece of the puzzle that's closely watched. And, we may or may not get a chance to trade it. It's right before the open. So if nothing else, it's a good way to kind of wake your brain up before you trade the first hour, if you do that. So join us for that. And then next Friday, I will be doing NFP again, and we will open that one up to the public as well. So whoa, look at this. He said something they liked. Boy, I might fade this. Hold on. We're not high enough now. We need to be up about 20 to fade, and we're trading at 95 right now. So not yet. But if we can get up here to 10.
We just cleaned up the UB at the RTH high and ES.
Oh, that's interesting. Then this might be and we did it with stops.
Yep.
Good spot potentially to fade, but we need a better entry. I'm going to throw some orders up here and see if I can catch a fill.
SD2 is just a little bit overhead still, too.
Yeah, it is. We could go, I got one there. Let's see if I can get another 5 on. But it's threatening to be profitable, so I'm going to use targets and scalp around this. There we go. Okay. We'll protect that one. Ooh, I have a nice little runner going here. I'm sure. Oh, and it filled. Wow. This is great. I love this. All right, let's do this for a while. Let's scalp this crap. I've got another order up there, and I'm going to stick one up here. And, you got to let it come to you when it's this volatile. But if it does, it often can be quick money like you just saw me making there. So I might even trade this in my PA if it settles a bit. Oh, wow. Now we're really pushing down, getting absorbed. All right, so he's saying something that the market is digesting. That's why this is happening. Ooh, we could get a trade at the other end of the range, too. Let's see how far down this goes. The equities really liked whatever they said. We shot all the way up to 944. Now I'm thinking this could be a long right back on the VWAP. Let's see if this starts getting bought. And and there it is. Hello. Oh, wow. So that 5 lot is now up $200 and it just filled on my take profit. That's how you have to scalp. You have to be that nimble. And just when you see something that's, oh, that's a long, you have to just jump in long. Yeah, particularly when you're playing, this stuff. Let's see if we can get a short up here again, although this one might be too early, but I'll take it if I get it. I'm going to close that.
Stops on SD2 to the tick.
Yep. Yeah, I'm going to grab a short right there. I missed it. I wanted 12. There it is. We're up another 100. Hello. All right. Let me bring up the SD so we can see what we're talking about.
Hopefully I haven't confused anyone. I'm talking ES because that's what I watch. But
no, NQ is nowhere near them at all. Yeah. Correct. ES is the only one at extremes, but it's the general benchmark. So let's see if we can get a fill up here. I've got an order right here. I tried to chase it and couldn't get it. I missed by a few ticks again. There we go. We got it. Okay. So we're short now 18. Again, I'm going to try to scale this and see if we can catch a runner down for another $100 or so. But, we're nowhere near the high. So I've got to scale very slow if I'm going to do it. And that's swarming. So this guy needs to be much higher up. Let's get that one up. We got it. Perfect. Okay. Take profits there. We'll protect it. So now we have a 10 lot for another $200. Now it's a 5 lot. And now we're out. That's a little faster than it usually goes, but that's how you scalp NQ during price discovery. And again, all you have to do is wait for extremes, and you have to have the skills to place your orders quickly. It's hard to do in any platform that doesn't have a real good order entry system like Jigsaw does. But, come on, let's get short up here. This is perfect.
Almost feels like a short squeeze the way ES is moving up.
Yeah, it did. But it's a perfect place to scalp NQ because of the tech. So now I'm up another 100 here. There we go. It's pushing up again. Again, you have to scale very slow if you're going to do this because you can't get really far offside. See, it's profitable again. That one didn't fill that first target. So let's try that. Move that up a bit. We'll scale a little bit more here. Then we'll take profits right here. Good absorption there, but it still could go up. The tick is really strong. There we go. We're about to take profits here. Come on, baby. Let's push up just a little. Now we're at a nice extreme in NQ. We're right on the edge of the range and the market's rallying. This could be a short squeeze. You may have that right. It feels like one, but it's still a fadeable short squeeze. I'm willing to take some risks too.
We're almost to SD4. We're just we're a few ticks from SD4 and ES. Holy crap.
Exactly. Yeah. But remember, NQ is nowhere near there. So be careful.
NQ is a totally different story.
But I'm in a really good trade over here. I've got 35. And I'm profitable there. I'm taking profits on the pushes down like you're seeing now. And this is as good as it gets. Look at this shit. Pardon my French. But that was another $400 there. Let's protect the last 150. God, it just ran away. All right, come on up here. We'll fade you some more, baby. Come on. And let's take that off there. And then we'll have 5 left and we'll see how far it drops. This high volume node is a good spot to take the next 100 off or the next 5 off, just using a target. And I'm going to cancel these other orders so I don't get hit down there. Let's see if we can add to this a bit up here. Oh, there it is. There it is. There it is. And we're flat. Okay, going to kill all the orders and we'll wait for another opportunity. Those trades you just saw me do, we made one, but let me just add it up and subtract the commissions. That was about $400, 5, 10 micros at a time. At one point I had 35 on, but that was just for a second, just because I was swarming that volume up there. So that was a good example of how you swarm very, very volatile action. And I'm going to do it again up here. But again, don't just do what I do.
We are pushing the high in ES.
Oh, yeah. This is definitely a short squeeze, but it's a tradable one. It's going to be a great close. Oh, here we go. Beautiful. Loving this. Every trade's $100. It's like, the ATM, it's not giving us 20s. It's giving us hundreds. All right. Anyway, this is fun. I'm going to go ahead and start wrapping this up here, though. Any other questions or comments? I already asked Burning Desires, so we'll ask one more time. This is definitely a short squeeze. I'm not going to fade this.
Yeah, look at it go. Man.
Yeah, it's rocking and rolling now. And the tick is really high, and the tick in the NASDAQ's really high, and the VIX dropped really low, and it's risk off. We're going to rally. So the close will be a really good time to trade this, but take a break right now, guys. We've got a lot of time. The equities don't close till an hour from the top of the hour. So this last hour is going to be really good, but you've got to let it play out a little bit first. The short squeeze could push a long way before it sets up a really good fade. And I don't think it's done yet, but we're at an extreme. This is actually another good extreme. You can see if you look at the LRCs, but we're pretty aggressively going up and we're making a lot of higher highs. So
There's not a price rejector on the Globex high in ES.
No. But again, you can scalp the volatility if you're skilled. Otherwise, wait for ledge breaks and fade them. That's the right way to play it.
And just to be clear, I meant not that there is not a price rejector, but there is not a price rejector, which I just scalped for
you guys call it
ticks in ES.
There you go, exactly. And you scalped it long or short?
Long.
Yeah, exactly right. And there was a price rejector on the pullback. So yeah.
Yes, price rejector on the pullback and not a price rejector at the Globex high, which we all know the stats around. So yeah, that was a beautiful scalp long, super easy, no MAE at all.
It's on my screen right now. I brought it up. So you can see it. I know you're not watching my screen. Yeah.
Yep, I just looked over. Yep, there it is.
And here's what NQ looks like. It still hasn't even paused, although we did get stops on that last push up. This is a good spot for another potential short. It's very extreme. I missed it, but I'm still making money with it. I missed the entry by a long shot. I was trying to hit 84. I hit 74, but I was just hitting the market. Trying to use limit orders can be really hard. There we go. Now we've got a really good short. Let's protect it. Oh, this is epic. $300. Boom, on a 5 lot. I love it. All right. I'm going to go ahead and wrap this up. This was fun, guys. I hope you enjoyed it. I hope you learned something. No other questions. I don't see any burning desires. We'll go ahead and wrap it up. I'll see you guys tomorrow for GDP. Trade the close today, but be careful, be nimble. It's going to be a great close. I'm not going to do a live session I might, but I doubt it. If I can get a personal issue cleared up, watch the alerts. I might put one up, but I don't think so. All right, we're out of here. Thank you, JVC. I'll see you guys later.
Yep. Catch you all later.